You're listening to BioTalk with Rich Bendis, the only podcast focused on the BioHealth Capital Region. Each episode, we'll talk to leaders in the industry to break down the biggest topics happening today in biohealth.
Hi, this is Rich Bendis. I'm your host for BioTalk. And as you know, we bring on interesting guests to talk about topics that are of interest to our BioHealth Capital Region, the nation, and the world as a whole. And we have someone today to talk about something that is very important and very popular, but sometimes underappreciated within the state of Maryland, and that is venture capital. We always talk about the need for more, and we just had the big JP Morgan meeting in San Francisco in the second week in January, where all the major investors from the United States and the world come together. And we have some feelings about what the current investment climate is. But we thought we'd talk to an expert, especially in the state of Maryland, in investing. And we have Deborah Hemingway, who is the founder and managing partner of Ecphora Capital. And that's ECPHORA for those who have not seen Ecphora Capital. And Deborah's with us on BioTalk today. Welcome to BioTalk, Deborah.
Thank you so much, Rich. It's a pleasure to be here.
Everybody's interested to learn about you, Ecphora Capital, and really what you think about the state of the investment climate is in our region. So before we get into that, Deborah, why don't you introduce yourself to all of our investors, your background, how you decided to get into the investment world, why you decided to found Ecphora Capital, and anything that you feel would be interesting to the listeners.
Well, as Rich mentioned, my name is Deborah Hemingway, and I am a PhD. Academically, I'm a research scientist. My PhD is in biophysics, and I've always had a love for interdisciplinary work. In my own dissertation work, I've bridged the physics and biological sciences, and so it was wonderful to see them come together in that way. And over the course of my career, I've also been very involved in entrepreneurship. At this point, I've either founded, funded, advised, or invested in 53 startups. It's been quite a journey. I like to say I've seen enough failure to keep me humble and success to keep me going. Any entrepreneur will tell you that it's quite a journey. I've experienced that myself. I'm fortunate now to have been able to be running Ecphora Capital, and we're now an early stage medtech VC firm here in Maryland. We got started investing in medtech because I had been doing angel investing in medtech, and I mentioned my PhD is in a related field. And so it all came together in a beautiful way that is now Ecphora Capital.
When you talk about medtech, can you define medtech in the way that you look at medtech compared to other people and how they might define it?
So I know there's a lot of different ways to slice and dice the whole medical industry. For us in my firm, whenever we use the term medtech, we mean medical technology or tech-enabled medical products. For us, that can range from surgical tools, that can be implantables, it can be diagnostics, anything across the spectrum that is tech-enabled and medically facing.
If you get into the therapeutic world, you would not be into the drug world then.
We actually had our first investment this year in a regenerative medicine. So it's an engineered protein company. And so that was our first step out of the medical device arena. So we are expanding as we grow as a firm. And as our expertise grows as well, we're expanding outside of the traditional medtech arena.
And you mentioned you're a Maryland-based firm. So where are you located and why did you locate in your current location, Deborah?
We are in the launch port, which is in City Garage. We partnered with Bob Story, who's the managing partner over at the launch port. And it's such a phenomenal location to be in. The launch port does medical device manufacturing. And actually, the majority of our portfolio companies are there in the launch port. And so it's wonderful to be able to interact with them on a daily basis, to see what they're working on, how their product development is going or sometimes not going. When their prototype breaks, we know it and we see it and we work with them through it and help them keep going. So it's wonderful to be able to interact with our portfolio companies, in a really intimate way. Why the launch port? Just because we're so drawn to the facility. It's great. It's right there in Baltimore, and we have strong ties to the local universities there. It's really just a phenomenal place to be. We couldn't ask for a better place to be.
And while you're located in Baltimore and at Launchport and you're focused on medtech, are you investing only in companies located in Maryland or do you expand beyond the Maryland area?
So far, we've been focused on Maryland-based companies. We're a Maryland firm, Maryland found, Maryland focused. Part of that is because we're not affiliated with the state, but we have been leveraging some really phenomenal incentives that the state has to both keep companies here and also to offset the downside risk and incentivize investments. So we're happy to be here. It's an amazing opportunity to be here because in Maryland, we have so much innovation. I don't have to tell you, Rich, you see it. You see all of our incredible innovation that we have here coming out of our universities, the phenomenal universities and government labs that we have. There's no shortage of innovation and smart people, but there's an incredible opportunity here for the investor because we historically don't have the strength of the investment community. So even small firms such as mine have access to the most amazing and compelling technologies and startups coming out of these universities. So we really have unprecedented access for a small firm. So having access to that capital really helps us to invest in and then now present to our network and to our investors the most incredible companies. Having access, like I said, and then also with the potential to grow the area. We have this strong base in the innovation piece. Now it's time to really ramp up the commercialization piece because we want our companies to stay here in Maryland. Because if we kept all the companies instead of having them leave and go to more established hot places, now, hotbeds of medical innovation. I'm not going to name any names, but there are some certain locations that tend to steal all of our companies. But if we could keep those here, Maryland would be a completely different region in terms of commercial activity, especially for medical devices and in the medtech scene where we're operating. So we want to keep our amazing companies here.
It's great that you decided to focus on Maryland because it's definitely needed. And as you mentioned, we have a tremendous amount of assets to look at investing in. But let's talk a little bit more about your investment philosophy. You mentioned medtech. Let's talk about the stage of investment you generally get invested in. What is the size range of the investment? Do you generally co-invest or do you lead investments? A little more philosophy on Ecphora Capital's investment strategy.
We're really focused on growing the early stage medtech ecosystem and then also on sustaining some of our established companies and keeping them here as well. So our sweet spot is around seed to Series A. That's where the majority of our investments are focused. We like the check size between $1 million and $1.6 million. We can flex that and go earlier down to a pre-seed company. We can also flex up to a B with check sizes ranging from 1.5, but we are capped at 1.6 because of some state programs that we leverage. That's what we like to focus on. In terms of co-investing, we do invest quite frequently alongside TEDCO, our state-backed investing agency. TEDCO has actually co-invested with us in 100% of our portfolio companies so far. So they're our strongest co-investor, and we're really thrilled to be investing alongside of TEDCO.
They've been an investor for a couple decades now, and one of the leading early stage investors in the United States. It's nice to have that as a resource within the state of Maryland. So you mentioned talking about retaining companies and helping with commercialization. One of the challenges we have in the region and in Maryland is we have great science and great technology. We have great researchers, but we don't have as much emphasis or have not in the past on the commercialization aspects of it. So how do you get that product into the marketplace? How do you validate that the market's ready for it? So you mentioned a lot of the investments you make are co-located in the same location where you are in City Garage. Do you think that gives you an advantage in that whole commercialization and go-to-market strategy by having that proximity?
That absolutely is 100% why we're there and part of the strength that we offer. Ecphora is here, and as we're growing as our firm and establishing our presence here, part of that is to help build out this commercialization piece, because that is really the next step in the growth of Maryland. Maryland is on the rise, and it's such a thrilling time to be a part of this ecosystem that is emerging and is growing. And the explosive growth is just phenomenal. And it's beyond exciting to be here and be a part of it. So I look at Ecphora as filling out that next piece. I mean, what is missing in the commercialization landscape? And it is capital. And so we are looking to bring that in and to strengthen the ecosystem in that way and to really help Maryland elevate and reach that next level of establishing ourselves as a commercialization powerhouse and not just an innovation powerhouse.
The gap that we've had is this sort of innovation capital gap for many years. Once you get beyond Ecphora and TEDCO, then getting ready to go to Series A, that seems to be the gap that really most people have a challenge in finding. So how do you feel we need to address that more effectively? And what are you trying to do to help stimulate more investment in that pre-seed, seed investment, getting ready for Series A stage?
We will invest in the seed and Series A stage. What we have done also is build out our investor network so that we have partners to come in alongside us and support even a stronger Series A. I mentioned we'll come in at a $1.6 million check, but that's not enough to lead a $10 or $15 million Series A, especially in the medical device space. So we do need co-investors. So we are building out our co-investor network. And then also looking to other firms that we have relationships with to pass those companies along to, and having that connection and being a pipeline for larger firms. The larger firms are outside of our state for now, but having those relationships gives our companies somewhere to go after we've put capital in, and also helps them fill out the rest of their rounds. Also, Ecphora Capital, we're growing ourselves. We've done $15 million over the past 2 years, just over 24 months of investing so far. And we are looking to grow that and build that out. And we want to be the next commercialization powerhouse investor here in Maryland, and supporting that region and filling that gap and having a commercial stage VC here. It's what Maryland needs. And so why not step up and meet that need?
Congratulations on the commitment of $15 million in your first fund. I think you're thinking about putting a second fund together now, right, Deborah?
That's right. Yes, we are.
What do you see as the primary source for the investors who would have an interest in Ecphora Capital and actually growing our ecosystem?
When we think about sources of capital, our strongest supporters so far have been high net worth individuals. So we've really connected with some very influential and very wonderful high net worth individuals who have given us the capital for our early investments, along with a couple of family offices, a local nonprofit. So we have a wonderful group of supporters. They've been amazing to us for the first tranche, and now we're getting ready for the next go.
And have you found that most of the people interested in investing in your funds in the early stages have been people locally that understand the ecosystem and the need for the gap that you're filling?
Yeah, so they do see the need for the gap, but most of our funding has actually come from outside the state coming into the state. I would love to ramp up and bring in some more local people as well. So far, most of our funding has come from outside the state, outside dollars coming in, which is amazing because people outside the state recognize the amazing innovation that we have here and the opportunity that we have here and the strength of our companies. So it's wonderful to get that recognition nationwide and even globally. We do have global investors as well.
It's nice to see outside capital coming in. And then once they see the strength of what you built here, then it can attract hopefully some more of the local capital to come in. You mentioned TEDCO, but really Maryland has an interesting portfolio of investment programs, which makes it attractive for early stage companies to be located in Maryland and in the Baltimore area. So talk a little bit about some of those programs that you feel you can leverage with Ecphora Capital that makes it attractive for you to have your venture firm located in Maryland.
I will highlight one program that my firm has really leaned into, and that is a tax credit program that we have here in Maryland. It's called the Biotechnology Investment Incentive Tax Credit Program. So quite a mouthful. We do call it the BITC. There's also a counterpart to this. It's an innovation program called the ITSI. So we have, yes, the ITSI BITC here in Maryland. Quite a number of jokes about that. So I'll save those for another podcast. The Biotechnology Investment Incentive Tax Credit Program is a program that incentivizes companies to stay here in the state, particularly biotech. And the state uses the word biotech loosely to cover biotech and medical and health tech, anything that touches biological systems. This program has a component for the companies and for the investors. For the companies, they have to commit to staying in Maryland. So the commitment is at least 3 years. So companies, they can either get established here or they can move here after they've already formed, but they have to stay here for at least 3 years after they participate with the program. The hope, though, is that the companies will stay indefinitely. We want them to be here for 3 years and then to grow and love this place and to stay longer. And we do see that mostly happening. Then what the state does in exchange for the company's commitment to the state of Maryland is it offsets the downside risk for investors. What I mean by that is that the state actually gives a tax credit to the investors for part of their investment. And what this does is this helps companies more easily raise capital, also helps them raise more money. What we see is, why don't investors invest? Why doesn't everyone invest in startups? Look, startups are amazing. Startups are the engine that fuels the economy. Startups are a phenomenal investment opportunity, but people, they're hesitant to invest in startups because of the risk associated with it. The state tax credit program reduces that risk. My firm is actually the first and only firm to get the top level of the tax credit program. What this means is that the state gives us back a percentage of our investment, regardless of how the company does. So for us, we get 75% of our investment back, which is a phenomenal percentage. And we get this because we are an opportunity zone-based fund investing in opportunity zone-based companies. So these are not only medical companies that are doing phenomenal innovation, but they're also located in the historically most economically depressed areas of the city and of the state, because we invest outside of Baltimore as well, but in these zones that are historically economically very disadvantaged. And so because we're doing that, and we're also giving back to the local community through a workforce development program that my firm runs. It's actually a CEO workforce development program. So we're raising up the next generation of that entrepreneurial talent. We've put all these pieces together to enable us to receive this top level of the tax credit program. So what this means in a practical sense is that whenever we put in $1 million to the company, the state offsets that by $750,000 in tax credits. This incentivized investments helps us to raise capital more readily, allows us to put more money in to these companies. And then in turn, these companies are staying here and they're making jobs here. They are turning into those commercialization entities that we need here. We've seen this work very, very successfully. There's a company that we're backing right now called Longevity Neurosolutions, and they're based right here in Baltimore in an economic zone. The year has been incredible in terms of commercialization for them. So they are on the market in thousands and thousands of patients. They are exactly what this program was designed to do, to come in and support these phenomenal companies that are building here, that are doing manufacturing here. I love whenever people come to the launch port and to City Garage, and we can give them tours of it. And we can literally see Longevity manufacturing their cranial implants right there. It's phenomenal to watch, and it's so rewarding to be a part of. The tax credit programs have been phenomenal in Maryland for investing in our early stage companies and keeping them here and growing the economy here in Maryland.
That's a fantastic program, and I'm very familiar with it because I've been actually a recipient and an investor in some early stage companies in the BITSI program. And it's called a tax credit program, but that's a little misleading because if investors aren't in the state of Maryland and don't have a tax liability, they can actually get a check back rather than having to worry about a tax credit if they don't have a tax liability. So from your perspective, if I understand correctly, if you did $1 million investment, you could actually get $750,000 back to reinvest in additional companies for those that you've already invested in the state of Maryland. Is that correct?
We do actually return the capital to the investors, but then we invite them to, of course, put that money back in if they want. They can do what they want with the refundable tax credit. But that's a great point. Since it is refundable, investors outside the state, or in some cases, even outside of the country, can receive the refundable portion of it, as long as the company stays here for at least 3 years, because there is a clawback. If the company leaves, we lock that down and make sure that they are committed to Maryland and they are staying here. We do see investors, after they've received the refundable portion of the tax credit, put that back in and invest further. And it's wonderful to see, because that just goes to show that the program is working, and it's working beautifully. As we continue to support these amazing companies, then it just keeps feeding itself and growing and growing. And it's like I just said earlier, it's phenomenal to be a part of this. And it's so exciting to be a part of this momentum that's building and this ecosystem that's growing, and really being on the forefront of that move to commercialization. There's no place I'd rather be.
Well, I can hear your enthusiasm in this discussion here, Deborah. So thank you for that commitment that you have to building this ecosystem. But one term that a lot of the listeners might not be familiar with is clawback. Can you explain clawback a little bit to them?
With the Biotechnology Investment Incentive Tax Credit Program, there is a 3-year commitment, as I mentioned. But if a company decides that they no longer want to be in Maryland, or they don't want to participate in the program anymore, they can leave. They just have to give the money back. They have to give the tax credit back that they have received. We make sure that we're investing in companies that do want to stay here and have a long-term commitment to the state, because clawback means that you're taking back what you've given.
You're incentivized really to provide all the support and resources to these companies to want them to stay and to say that this is as vibrant as any other place in the United States to build your company.
That's absolutely correct.
And you mentioned Longevity. We're familiar with it because BioHealth Innovation is actually working with Longevity now to help them apply for some non-dilutive funding with the company. So we think that's a star that is rising and can be one of the leading medtech companies, not just in Maryland, but in the United States and globally with what they're doing. So we're very excited about Longevity as well. You mentioned the $15 million you deployed over the last 2 years. Let's talk about what you can see as sort of the key milestones related to those investments, and what are your expectations from a portfolio management standpoint? We know in venture capital, every investment is not going to work, but You've got to get in the game because you're not sure exactly which ones are actually going to be the most successful ones in the future. So talk about your sort of investment portfolio strategy and how you view what you would consider success if you look at it 3 to 5 years from now.
Part of the advantage of investing in Maryland-based companies is that I have known many of these entrepreneurs for decades. And I not only know them, I know their family, I know their history. We went to school together. And so we have a very deep and trusting relationship. And that is such an incredible advantage that particularly my firm brings to the table is that deep, deep knowledge of the CEOs themselves and also of the industry. When you have that good and trusting relationship already established with the CEOs, then you're able to gain insight into the companies more readily. And they're just much more open to you than would be a traditional venture sense when you're just meeting your funder for the first time. We've known our CEOs for years and we've seen them operate and watched them grow in a lot of cases. For our portfolio performance, we've invested in 11 companies so far, and 8 of them are doing very, very well. 2 of them are flat. This is over the past 2 years. 2 of them are just flat, continuing on. We have been prodding them to move a little faster. And then we have been having one that's been having some trouble. When they're having trouble, we surround them. We have people who are surrounding the companies and trying to help them move in the right direction and encourage them as much as we can. But so far, we have 8 that are just hitting milestones, making progress, and knocking it out of the park. We're doing very, very well in terms of markup and increases in valuation. And we're pushing them towards exits. My companies, we expect to see them exit in about 5 years is the plan, plus or minus. We're still a little early for exit. We don't expect that yet, but we have high expectations.
Well, that sounds like it's very good performance. And then when you talk about exits, there's many ways that companies can exit and what ways that venture capitalists can get returns. But if you look at the national and the global market investment climate right now, you have mergers and acquisitions, you have licensing, you have IPOs. I just saw the first IPO in the United States was a Maryland company that just went public this week, which is exciting. What do you see as the most strategic path and most likely path for your exits in the future?
Our companies, vast majority of them are on the M&A path. And that's one thing that we talked to them about from the very beginning. To get an investment from Ecphora Capital, we have to see a very clear exit plan. What is the path? Who is going to buy you? At what point? What milestones do you have to meet to get there? But also, how much are they going to pay? What is the market rate for these companies? Because we begin with the end in mind, we're able to talk to the CEOs and get on the same page about what the exit plan is and how much we want to increase the valuation of the company to. And then we have a sense of what our multiple is going to be whenever we invest in the company. So beginning with the end in mind, and like I said, the vast majority of the cases are M&A, and they have the potential acquirers in mind, and they're building companies that will be acquired by the potential larger strategics.
One of the things you mentioned earlier, it's not as much a partnership, but you have a co-investor in Tedco that's very familiar with you and trusts you, and they like to invest in what you do. But talk about any other strategic, strong partnerships or relationships that you've formed within the region, whether it be academic or other investors, that you see that are critical to your success going forward.
I mentioned the Launchport, and the Launchport has been our best business partner and ally in this battle, in this quest. And we're perfectly aligned with the Launchport in our vision to build out the commercialization opportunity that we have here in Maryland. We're just so grateful for the Launchport and for the work that they're doing to establish this manufacturing powerhouse and seize the opportunity we have right in front of us, especially in terms of manufacturing and manufacturing right here in Baltimore. And we should be. I mean, why not? This area is prime for medical manufacturing. We should have medical manufacturing at the forefront of what we're doing in Baltimore. I mean, it's an incredible opportunity with all the innovation we have here and all the companies that need manufacturing. We should be doing it right here. And so teaming up with the Launchport has been phenomenal in making that happen. We also work very closely with BioBuzz. BioBuzz is another local ecosystem builder, and they do a phenomenal job with bringing in talent and matching companies with their needs, and also building up the local ecosystem with their events and their media, and just working very hard to build that sense of community. So we enjoy our partnership with BioBuzz. We'd love to strengthen our partnership with BioHealth Innovation. You guys are wonderful, very well-respected powerhouse institution here in Maryland. Should definitely work on ramping that up as well.
I'll pay you afterwards, Deborah.
Yes, please do. It's partnering with other organizations like that. We have a new partnership now with a new startup studio at ETC that's here in Baltimore. They're working on launching the companies, and then we have a handoff after the companies are launched and formed and are ready to receive venture capital with them. And so just teaming up together with the other entities here, strengthen numbers. And so we're all starting to really rally together and work together to strengthen the community. And then I think of like other banks and service providers and law firms, and everyone is really starting to take note of this rise. And it's exciting to have everyone come and like rally behind these phenomenal companies.
And it really requires a leader to help attract all of that, Deborah. The other thing that I'd like to talk about is you mentioned the strong technology in our region, and a lot of that, it comes out of our universities, University of Maryland system and Johns Hopkins. If you look at your portfolio, what percentage of your investments have really started coming out of our university system to where they spun out or the technology started there?
I will start by counting the one that hasn't, and that is one. So we do have one that is homegrown technology, but that one, after inventing the base technology, has been partnered with a local university to continue to develop it. We have half of a company that's not university affiliated.
So basically, 10 out of 11 have originated out of our academic institutions, which is really pretty impressive.
That's right. 10 out of 11 have originated in an academic institution, and now 11 out of 11 are affiliated with one of the powerhouse institutions. And I mean, why not? With all that power just right here, I mean, the startups can just tap into it and just accelerates what they already have. And in this time, we think about capital efficiency because capital is so tight right now. And we see that ourselves too. And one of the ways to be incredibly capital efficient is to lean into the universities and the resources that they have and can provide to really leverage what you have. And I can go so much further when you are able to lean into a very, very strong medical research institution to accelerate and to build on what you have. And it really helps with that capital efficiency, which is what we need to see right now.
It sounds like you're on the right path, Deborah. As we close this discussion around venture capital and Ecphora Capital, and we're talking with Deborah Hemingway, who is the founder and managing partner for Ecphora Capital, talk a little bit about where you think we have areas to improve within Maryland, Baltimore, the BioHealth Capital Region to make it even more successful than what this emergence is evolving right now.
I want to see more investors coming in. Ecphora is doing an amazing job. Very proud of the capital that we've been able to put to work so far. I want to see more Ecphoras coming on the scene here so we can rally together to support these companies. I want to see more investors, more high net worth individuals getting involved and leaning into these opportunities to support our local economy and building out this amazing opportunity that we have to establish, especially Baltimore, as the epicenter of medical commercialization. And so I want to see people getting more involved in this early ecosystem building. I also want to see more CEOs coming on board and stepping up. Part of what we do, I mentioned earlier with the BITC tax credit, is we have this workforce development program to build out our CEO talent pool. If we do have exited CEOs and entrepreneurs who do have that experience, we'd love to have them come in and help work with some of our early stage companies to help foster them and grow them and really accelerate their pathway to revenue generation and ultimately M&A.
Well, it sounds like you've laid out a plan. All we have to do is implement it. And it takes all those partners that are surrounding Ecphora Capital that can help support this ecosystem growth. So is there anything that we haven't discussed you'd like to have the listeners know today?
No, this has really been fantastic. I would just like to, I guess, again, say what a privilege and what an incredible opportunity it is to be a part of this rising and emerging ecosystem that we have here. And Maryland's on the rise. And so you guys are welcome to come check it out.
And if people want to learn more about Ecphora, how can they find out more about you and the company, Deborah?
People can email me directly. My email address is deborah@ecphoracapital.com. It's DEBORAH at Ecphora Capital. They can check out our website. Our website's kind of minimal, but it's ecphoracapital.com, www.ecphoracapital.com. You can follow me on LinkedIn. I try to stay pretty active on LinkedIn with what's happening in the ecosystems. I'm always doing posts whenever there's a gathering or an exciting event. I try to share it. Also try to give good educational component too. I try to make my posts both entertaining and educational. I try to keep them just fun enough to keep people reading, but not too over the top. Pretty active on LinkedIn also. So I think those are the best ways to get in touch with the firm.
Super. Well, I appreciate your taking the time today to talk on BioTalk and educate some of the people about some of the resources available for investment in the state of Maryland and more about Ecphora Capital. So congratulations on what you accomplished. We wish you significant success for your growth in the future. And we'll follow up with you about all of these 11 investments, which will hopefully turn into 22 or 30 as you continue to do your fundraising in your next fund. So Deborah Hemingway, founder and CEO, managing partner of Ecphora Capital, thank you for being on BioTalk.
Thank you so much.
Thanks for listening to BioTalk with Rich Bendis.